Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, February 28th, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 in Hamilton, and in Mexico City, 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-667-CATEX. Overseas, our AOL instant mail address is CATEX-TV. The last surviving American veteran of World War I, Frank Buckles, died yesterday at the age of 110. He died at home in West Virginia. The end of an era. There are only two people, apparently, who participated in that conflict still living. One is in England and another one is in France. So that era will soon be completely gone. We'll go to our main news. It's coming from South Asia, actually, or Australasia, Frank O'Halloran. Some global reinsurers may be forced to pull out of Australia and New Zealand. This is after a series of natural disasters in the past 18 months or so has struck their bottom line. This is according to QBE insurance chief Frank O'Halloran. He said some of the world's biggest reinsurers had taken a financial hammering from payouts linked to floods, hailstorms, and now the earthquakes in New Zealand. His comment set the scene for a further jump in premiums, with insurers facing a tough round of negotiations with their reinsurers on pricing. O'Halloran says that QBE is insulated because they've locked in a 3-year deal with reinsurers. They did this last year. Initial market-based estimates have put insurance losses from the Christchurch quake as high as $12 billion US. According to O'Halloran, be prepared for pretty tough terms and conditions and pricing coming through from reinsurers. And some of them may not even want to reinsure businesses in Australia and New Zealand. QBE, despite being insulated, posted a 17% fall in full-year net profit in 2010. Earnings momentum slowed in the second 6 months as catastrophe payouts rose. QBE reported a net profit of $1.28 billion compared to $1.53 billion a year ago. The full-year insurance profit margin was 15%, outside QBE's target range of 16 to 18%. QBE revealed that the New Zealand quake could cost it up to $175 million US after taking reinsurance costs into account. All in all, not a terrible year at all. Here's an interesting story. Hiscox chairman Robert Hiscox has criticized the practice of insurers paying brokers and described competition levels for fees as ridiculous. In his chairman's statement accompanying the Lloyd's Insurers 2010 results, which we'll talk about in a minute, Mr. Hiscox branded insurers giving brokers a cut of the premium as, quote, a deficiency in the insurance market. He went on to say this not only leads to obvious conflicts, the higher the premium, the bigger the pay, the placing of business with the biggest payer of commission, not the best insurer, but also made the clients believe that they got the services of the brokers for nothing. Hiscox added that brokers had been reluctant to charge clients the proper fee and were competing with each other on fees, quote, to a ridiculous extent, and were therefore seeking to make up the shortfall by charging insurers. He said, this is a big issue at the moment, and I just hope that it will be resolved sensibly before a solution is imposed either by the law or again by a crusading regulator. He also lashed out at the lack of underwriting discipline on the part of his competitors. He cited an example of the premium for piracy insurance in the Gulf of Aden, where the appropriate premium, I should say, is roughly calculated by relating the number of journeys through the Gulf to the number of successful kidnaps. He said rivals undercut Hiscox's rates by 50% at the same time as ransom demands from pirates doubled. He said, how can any management allow an underwriter to compete at a quarter of the rates of the established market? Hiscox then said there's talk that a major market loss is needed to turn the market around. He said, I personally hope that there continues to be a constant attrition of medium losses and no major events, so that discipline has to be learned the hard way. Bravo for you, Mr. Hiscox. Very few people would say that, and you certainly have the credits to say just what you said. Good for you. On the financial front from Hiscox, They recorded a post-tax profit of £179 million for 2010. This is on gross premiums written of about £1.4 billion, fractionally down from about £1.43 billion recorded in 2009. The combined ratio jumped up to 89.3% from 86%. Hiscox called it a resilient result after an unnaturally large number of natural catastrophes, plus, of course, the BP oil spill in April. He noted that Hiscox had been underweight in Chile, New Zealand, and Australia, and had in fact declined to insure a significant company in the oil spill. He said that he continued to criticize sectors of the primary market. He specifically mentioned again the piracy in the Gulf of Aden, and he did say we'll be back in that market when competitors realize their folly and withdraw from the market, as some already have. Well, Berkshire Hathaway came in with their numbers, and they remain hungry for catastrophe reinsurance business, despite the fact that they cut premium written in that business last year, and they're waiting patiently for prices to improve. CAT, an individual risk premium written by Berkshire Hathaway Reinsurance, has been falling dramatically since 2008. In 2010, it wrote premium for a line of $584 million, slightly more than half the $1.1 billion back in 2009. In his commentary on the 2010 earnings, Warren Buffett said, "We constrained the volume of business written in 2010 as premium rates have not been attractive enough to warrant increasing volume. However," he said, "we have the capacity and the willingness to write substantially more business when appropriate pricing can be obtained." Mr. Buffett's company overall showed a very, very big jump. They have an enormous amount of money currently in their coffers. Bermuda-based Tokio Millennium Re, a subsidiary of Japan's Tokio Marine and Nichido Fire, has become the 7th Bermuda-based reinsurer to be allowed by the Florida Insurance Department to post 20% of collateral for its businesses in the Florida market. The company's president, Tatsuhiko Hoshina, said, "I'm very pleased with the decision by the Florida Department and that our financial strength has been recognized by the regulator." Well, this reaction to Solvency II in Britain keeps going and going and going. This is the farthest out comment we've seen, and it's coming from Dane Tote, so you have to pay attention to it because he's a pretty respected guy. He says that over-enthusiastic implementation of Solvency II in England could force even more insurers out of the British market and even inhibit the economy's recovery in England. Dote, whose company announced a 26% increase in after-tax profit for 2010, we announced that on Friday, insisted that Solvency II as a proposition is a good thing, but he did express grave doubts as to the way the authorities in Britain are preparing to implement the framework. He told Insurance Day today that he and fellow CEOs remain concerned about the implementation of Solvency II and that in the UK, it's going to be more rigorously implemented than anywhere else in Europe. He said, quote, "That will mean that the cost of doing business in terms of the amount of capital, the amount of people in the UK, is all going to be potentially higher than it would be in Europe, and in turn higher in Europe than elsewhere in the world." He said that heightens the danger that firms will choose to take their business elsewhere, threatening Britain's emergence from the economic turmoil. He said, quote, "If this government is really keen on making sure the UK comes out of the depression by growing business, this doesn't seem to be a very sensible tactic for doing so." Well, the stock market in New York is up about 75 points right now. We'll go to a word from our sponsors. Well, we have some oil statistics now from Libya. Libya, up until the chaos, had been exporting about 1.6 million barrels of oil a day. It's now down to about 800,000 barrels a day. It's been cut in half. Their biggest refinery, Ras Lanuf, has seen its supply of crude completely interrupted. Western countries have begun to send their first concrete aid into Libya in the hopes that Gaddafi is going to give in to momentum and leave. However, Gaddafi's regime has clamped down in its stronghold in Tripoli. Tripoli residents say that the price of food in the capital has absolutely skyrocketed. The two sides in the crisis seem to have become entrenched. Most of the eastern half of the country, including the oil infrastructure and some of the cities in the west, is in the hands of the resistors. Gaddafi is dug in the capital and nearby cities. He's backed by better armed security forces and militiamen. It's been reported that the resistance have shot down 2 military jets today that were apparently trying to retake the city of Zawiya, about 30 miles west of Tripoli. Also, over the weekend, civil strife spread to the Sultanate of Oman, which had previously been undisturbed by all of this. And the Sultan of Oman has promised to introduce reforms as quickly as possible. So this continues to spread. Thus far, in Saudi Arabia, all remains quiet. That's the one everybody's watching. In Iraq, an oil refinery in the town of Baji has been shut down following a fire started by a bomb attack. One person was killed. This occurred at about 4:30 a.m. local time on Saturday. According to reports, an unknown gunman equipped with silencers infiltrated the biggest refinery in the Baji refining complex and planted several improvised explosive devices and fled before detonating them. The entire refinery has now been closed. The chemical engineer died from smoke inhalation. The refinery was controlled for a long time by Al-Qaeda and Iraq fighters who used it to finance attacks. It's located only about 100 miles north of Baghdad. So Iraq currently has 3 major refineries: Baji in the north, which is closed, Basra in the south, and Dora in South Baghdad. Well, the Bermuda Premier Paula Cox made an interesting decision on Friday. You may recall that the government of Bermuda caught the reinsurance industry by surprise last year when they increased the standard rate of the payroll tax from 14% up to 16%. The proportion payable by employees increased a whole point from 4.7 to 5.7%. Well, Ms. Cox, after having gone through some extensive dialogue with the reinsurance community on island, made a decision that she's going to be dropping the corporate tax rate back down to 14% as part of her plans to drag the island's economy out of recession. Carolyn Folger, a partner at PricewaterhouseCoopers Bermuda, told Insurance Day that Ms. Cox's reversal would in fact boost Bermuda's tax collections by $50 million US, and that the Premier's decision also sent a strong message that the government was keen to listen to the concerns of international business and react accordingly. That's a good move by Ms. Cox. Well, this has come to pass. Insurance Insider has been reporting this as possible, but now we see it's happened. Tower Hill Insurance Group in Florida has completed the purchase of Royal Palm Insurance Company. This is a press release that comes off the Tower Hill website. With the purchase of Royal Palm, the market share and surplus of Tower Hill Insurance Group increased significantly. Here are some of the statistics now. The joint combined entity has surplus of $123 million, written premiums of about $567 million annually, and 348,000 policies in force in the state of Florida. That's a big piñata for a reinsurance broker, that's for sure, because there's no way they're going to want to hang on to that. They're going to have to seed that out fast. There was an earthquake of some size in Arkansas last night at about 11 p.m. It was a 4.7 magnitude quake. There's been no reports of any damage, but it was about 37 miles from the capital of Little Rock. That, of course, is in the New Madrid Fault area, so it's not exactly a foreign place for seismic activity. Well, here's an interesting story. You always wonder what happens to these things. This, of course, let's pull this picture up. This is the U.S. Air Flight 1549 that Captain Chesley Sully Sullenberger in January of 2009, about 2 years ago, landed in the Hudson River after he collided with a couple of geese after takeoff from LaGuardia Airport. It's a U.S. Airways Airbus A320. It sort of sank there in the Hudson River. It was pulled back up and dragged out of the water. The insurance company who insured it, Chartis Insurance Company, of course, declared it a total loss. And what better thing to do with such a carcass like that? Rather than break it up for scrap, Chartis announced over the weekend that they're in fact donating the entire plane, such as it is, to the Charlotte, Carolinas Aviation Museum, which is located right down at the Charlotte Douglas International Airport. The plane is fairly intact, and it's going to be sitting in a hangar there now. People are going to be able to go by and look at it. The president of the museum said that Flight 1549 is an internationally recognized aviation icon, which represents the highest reaches of human heroics and technological advancement, and is of inestimable historical value to the world. He commended Chartis for the foresight that they showed with the visionary contribution to future aviation safety. No word yet as to whether any of the passengers or Captain Sullenberger are going to go visit the plane. Stock market in New York is up about 66 points now. If we have any breaking news, we'll come back and tell you. In the meantime, thank you for watching, and we'll see you tomorrow.